Welcome back to episode 2 of our 3-part series on day trading. Our first video is on the basics of day trading. If you haven't seen that yet, be sure to check it out. Posted it a couple days ago. This video is on the #1 rule about pattern day trading that you need to know to be able to day trade legally. And then in our third video, which is gonna be out in a couple days, we're gonna talk about some actionable steps and how you can actually get started day trading if that's something that interests you. How are you guys doing today? My name is Crider, and I've made over 150 personal finance and stock market videos here on YouTube aimed at high school and college students. I have lectured hundreds of college students on personal finance, and I have a weekly podcast called Young Smart Money over on iTunes. Today we're going to be talking about pattern day trading and the #1 rule that you need to know to be able to day trade legally. So let's get into it. And before we hop in, I'm just going to say this is not any legal advice, and you should talk to a lawyer. So please don't sue me. Not legal advice. So the #1 rule that you need to know about day trading is the pattern day trading rule and how somebody is classified as a pattern day trader and what this means for them. So FINRA defines a pattern day trader as someone who executes 4 or more day trades in a 5-day window. All right, so let's break this down a little bit. Someone who executes. So execute means you actually have to go through with it. You actually have to complete a trade. All right, so executing 4 or more day trades in a 5-day window. What are day trades? Well, they're pretty much what they sound like. A day trade is just buying and selling a position in the same day. So if you do that 4 or more times within a 5-day window, you will be flagged as a pattern day trader by FINRA. But if you are flagged as a pattern day trader, what does that actually mean? Well, there are 2 requirements that you need to fulfill as a pattern day trader to not be breaking the law. The first one is that you need at least $25,000 worth of equity maintained in your trading account. All right, guys? So do you hear that? $25,000. If you want to be a pattern day trader, if you want to day trade 4 or more times, so any more than 3 times in a week in a 5-day window, you are going to need at least $25,000 worth of equity to do that. All right, guys? And that has to be in your trading account. So keep that in mind. And I should mention this 5-day window is on a sliding scale. So it's not like a Monday to Friday thing. You can't do like 3 day trades on Friday and then next Monday pick up with 3 more. Like it's a 5-day sliding scale that is only trading days. Okay, guys, so you got to keep that in mind. And the second requirement of a pattern day trader is that you need to be trading in a margin account. So a margin account is just an account where you can trade on margin. I made a whole video about trading on margin if you're interested in that, so I'll link that up as well. But it needs to be in a margin account, and you need to have at least $25,000 worth of equity in that account. All right, so keep that in mind. Now, this is the legal requirement. Again, not legal advice, but this is what FINRA says about pattern day traders. I'll link up the SEC's website down below so you can read more about this, but this is what FINRA says is legal. Now, certain brokers may actually impose rules that are stricter than this, because some brokers don't even want you getting close to being a pattern day trader unless you've gone through a whole bunch of hoops with them. So some brokers are going to impose stricter rules than these pattern day trader rules that you have to keep in mind as well. So you got to make sure you check with your broker about their specific day trading rules before you even go out and try to do any day trading whatsoever. So just for example, one of the brokers that I use is Robinhood. They're an iPhone app and they allow you to trade with 0 commission. So that's really nice for day trading because you're going to be trading in and out. And if you're paying commissions on these trades, that's going to really eat away at any potential profits you might make. And if you guys want to sign up for that, there's a link down below in the description for a free stock with them if you use my referral link. But with Robinhood, they actually don't go any stricter than FINRA's requirements. So the 4th day trade that you do on Robinhood in a 5-day window is going to flag your account. And if you don't have that $25,000 in your trading account, you're going to be restricted from trading for the next 90 days. All right, guys, so this is a pretty serious thing. If you do go over this rule, even accidentally, you're still going to be flagged for 90 days. I was reading through the terms on Robinhood's website, and they explicitly said it's in bold, and they're like, there is no exception to this rule. Even if it's like a mistake, even if you don't realize it, you're not going to be able to trade anything for the next 90 days. So you definitely want to make sure that you're not breaking this rule. Well, guys, thought I would keep this video pretty short just because it is a pretty straightforward topic, just a couple rules that I wanted to get out of the way and let you guys know about. So be sure to stay tuned for the next video in this series, which is going to be about the things that you need to know before you actually start trading and how to actually get started day trading. My name is Crider. I make daily financial YouTube videos here, and I'll see you guys in the next one.